What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, we are breaking down the new meme stock at the time period that we're talking about, and that is Opendoor. We're going to talk about it. I'm going to give you my insights for things. So if you're excited for today's video or just curious to hear what I have to say about Opendoor stock, feel free to like the video, subscribe to the channel, and turn on the bell notifications, as always, for all future uploads. Now, Opendoor stock gains 42% in wild day after doubling early Monday as volatility triggers trading halt. Now, if you're not aware about how this works, when you have these movements in the market that are huge, significant ones, there are actually triggers put in place. And it's not just for meme stocks, for the retail investors. It's also put in place for like the S&P 500, where if it has a huge sell-off in a certain time period, there are triggers that halt trading on all platforms across the board. So Opendoor Technology stock continued to its wild ride on Monday, rising 42% after a trading day that saw shares more than double before being halted for volatility in the final hour of the session. At its peak on Monday, Opendoor's intraday rally reached as much as 115% before triggering a volatility-related trading halt in the stock near 3 p.m. Eastern Time. The stock was halted for 10 minutes in the afternoon, but after the stock crossed the volatility limit, which is triggered when a stock share price moves too far and too quickly, depending on the per share value of the stock. And what you will notice if you take a look here is that there is the halt happening right there, and then boo, nice little sell-off you had there going into the market close. My guess is the reason why there was this big sell-off is this kind of goes back to the GameStop AMC saga back in late 2020 and 2021, where Robinhood halted trading and you couldn't buy shares, you could only sell them. And at that moment in time, since you could only sell and not buy, people just all sold off and everything else. Some people think there might be some huge whale here that sold off here and took all their profits. And we're going to talk about it a little bit and talk about what my viewpoint is and where my mind is when it comes to these kind of meme stocks like this. And again, I'm not a financial advisor, and this is not financial advice. What makes it a meme stock and not an actual company? Well, first of all, they're doing a reverse stock split at some point in time. Again, they have to decide by the board for that one. It's going to be happening on July 28th, which is about a week out from the time of recording this video here. And the stock split is going to be between 1 to 10 or 1 to 50 reverse split. So when companies reverse stock split, usually that's a bad sign of a failing company. It happens quite often. You can look at stocks and people are like, Fridge, how did the stock used to be like $3,000 a share? It's because it used to be worth, a lot less, but then they split. And again, when they reverse split the shares, what happens is they take less shares out and the value goes up, for quote unquote goes up. It doesn't actually go up. But for example, if you had, 100 shares at $1 each for Opendoor, and which would be, you're looking at $100 there, you would then have a reverse split of 1 to 10. You'd be looking at 10 shares for $10 each, essentially. So your equity position doesn't change, but they are basically taking shares away off the market. It's a reverse split in this case here. So usually not a good way of doing it. So again, the idea behind the reverse split, which is quoted right here, the most important thing about why they do it is so that they can become NASDAQ compliant. Because with NASDAQ compliance, you need to have a certain share price for a longer period of time to be able to still be listed on the NASDAQ. So again, this proposal is intended to support long-term shareholder value and give us optionality in preserving our listing on the NASDAQ. If you trade like under $1 for I forgot however long it is, then you don't become NASDAQ compliant. They give you a warning and say you got to get the share price up somehow. And it's either you build your company and actually make it a better company, which is the harder method, or you just do a reverse stock split and then it limits how many shares are out there. It ups the price of the shares, quote unquote, ups the price of the shares. And as a result, makes you become NASDAQ compliant. So that's kind of what's going on here. Now, again, basically how we look at for how Opendoor works, basically the idea behind Opendoor is that they are a company that they buy real estate and they flip it. It's essentially what they're doing here. So again, it's a leading digital platform for residential real estate. In 2014, we have set out to reinvent life's most important transaction with a new, radically simple way to buy and sell your home. We have rebuilt the entire consumer real estate experience and have made buying and selling possible online. We have served tens of thousands of customers who have come to Opendoor to make their moves easier. So again, basically what they do again is they buy the house, then they can flip it to sell it to somebody else, and they're able to make a profit as a result of it. The problem that Opendoor has dealt with, and if you take a look at their financial statements, it's the big problem. We'll take a look at them a little bit and kind of see how it goes here. But the problem behind it is that you're working in real estate and it's hard to understand where real estate's going to go, especially with interest rates and inflation right now, which we'll talk about that a little bit later on. It's very hard to kind of figure that out. So that's kind of what they basically do. It's this digital real estate where they're basically buying your house and they're going to flip it and sell it. And then the profit difference they're going to have will be what we're looking at here. What's really interesting to note is that if you take a look at, let's go to the SEC filings here really quick. We had a filing come in yesterday about about the intended sale of stock. And here's the form right here. And you take a look and see about how much they are selling off here. They sold 30,000 shares at a market value of $67,500. So she sold at around like $2 and something cents probably. I don't know if it tells us on here or not, but she sold about $2 or so. And the issuer, the one who sold it, Sydney Schwab. If you take a look, she's been kind of selling shares recently. We had a sale at July 16th, July 15th, June 17th, and June 16th. These are all Sydney Schwab being sold over and over and over and over again. And believe it or not, she's also on the management team of Opendoor. She is the chief legal officer. So she's someone who has a very high, high up level in the company itself. And so she is filing these forms that she's selling off her share values. Now, why would you do that? Well, if the meme stock is pumping up 100, 200%, why would you not sell off? And this is a very common thing that happens when meme stocks start to take off. Okay. For example, Ryan Cohen did the same thing with Bed Bath & Beyond back in 2022. Bed Bath & Beyond was going bankrupt so quick. And then it pumped. It had a huge market pump, and then he cashed it out. Which is a business 101, finance 101, makes sense. If your portfolio of your investment doubles, triples, quadruples, why would you not take profits and take the money out? Makes sense. This came after Bed Bath & Beyond, I believe, had a huge rally here. Talk about where he sold the share prices at. The stock fell 40%. After he sold everything off here, he had more than 7 million shares. He bought for $15 or so. He made about $59 million before the fees in this case. Shares were up more than 200% as of August. So he more than doubled his position. And it's one of those things where if you can more than double your position in a short amount of time, why would you not take your profits, cash out, and call it a day? And I feel like that's the same thing with this Sydney Schwab person who filed this yesterday. And it's not like a small amount. It's 30,000 shares. Before it was, 100 shares, 17,000 shares, 110,000 shares in June of June 16th. I'm not really quite sure. We can take a look at Opendoor. Let's see a look here. What happened June 16th? Anything good? June 16th. Oh my gosh, she sold. Oh, it was released down here. Good Lord. So she was down here and she just sold it off. But then again, you get this huge market rally here. And of course, when your portfolio is able to make some value, you're going to sell off your shares and take a profit here. So this is her second biggest sharehold sold. She sold 110,000 here. She sold 30,000 here. And again, in July 15th, which was about a week ago, she liquidated more. Yes, again, it makes sense. Again, from a business person, I would do this. I would sell off. If my position doubles, triples, quadruples, I'm selling off and taking profits, right? Why would you not do that? So Ryan Cohen did the same thing with Bed Bath & Beyond. Then it went bankrupt. CEO of AMC, Adam Aron, did the same thing. AMC pumped a huge amount. during the squeeze. This is back in 2021, after the meme stock saga and stuff like that kind of stuff happened here. But it had a little bit of a rally up, and he sold a lot of shares off here. And it'll tell you how much it went up at this point. He holds around 400 shares. He was selling about 1.25 million shares, it looks like. He said, I warned you guys I would do this one. Shares of AMC soared more than 1,700% this year. Meme stock craze. Yeah. If you open your Robinhood portfolio and one of the stocks that you bought was up 1,700%, not 17%, why would you not sell it off? I mean, I would sell off a lot of it. Not even all of it. I would sell off most of it, though. That's a crazy return. 1,700% is crazy. And that's where I feel we're at right now with Opendoor. Is this that big seller? Is that Sydney Schwab person? That obviously I won't know. But is this people starting to be like, I'm up 3x, 4x, I'm taking my profits, I'm calling it a day? We're in a market territory for this stock in particular where you are in very high risk territory. And people are going to be buying and be like, oh, I missed out on the rub. Yes, you might, and maybe you do, right? And maybe it runs up more. Obviously, it's a 14% pre-market. But at some point, what comes up must come down. Opendoor is not a good company. They're not profitable. If you take a look at their financials here, negative profit margin. Oh, that's cool. Negative operating margin. Negative 5% return on your assets. Negative 47% return on equity. Quarterly revenue growth, negative. Not growing, guys. Nothing happening here. Total debt to equity ratio from Yahoo Finance, 391%. They have a lot more debt than equity they actually have. Operating cash flow, oh cool, negative $600 million. They have $700 million in operating cash flow. Negative. Like I don't understand. Again, this is a meme stock. And again, the reason why it's rallying is because you had the guy from the hedge fund who was pumping this thing up, talking about just like Carvana had that file for bankruptcy. They rebalanced their financial statements, and now Carvana's worth like $300 a share. And we have people that are saying the same thing here. But here's the difference, though. Carvana was a company that focused with consumers, and it didn't have as much of an impact, or it wasn't as hard of a market to predict. It was cars, right? Carvana is for cars. Everybody needs cars and stuff like that. And Opendoor, everybody needs real estate and stuff like that, sure. But here's the problem right now. We are facing this huge problem of interest rates. Opendoor is sitting on a lot of houses right now because they can't sell it for a profit. They're selling them for losses maybe, but they can't sell them for profits because, again, they made a lot of money during 2020 time because interest rates were near zero or at zero, so they could buy houses, flip them quick, call it a day. But now it's not a buyer's market anymore. It's not a seller's market. It's a buyer's market because interest rates continue to be high. So not as many people are going to be willing to buy a house. They're waiting for rates to come back down. And again, when lower rates comes to higher house prices. With higher rates comes lower house prices. So what we're looking at right now is that it's not really a way to flip houses in this kind of economy right now in this time period. And we don't know what's happening here. Everybody's telling Jerome Powell to cut rates, and he doesn't cut rates. Everybody's telling him to step down. He's not going to step down. Everybody's talking about rate cuts in July. That's not going to happen. We can take a look at the interest rates that we have right now, and the probability of a rate cut in July in about a week is 5%, 4.7. The probability, let me zoom in here a little bit for you guys so you guys all get the picture here. Our next rate cut potential wouldn't come until September 17th. And right now we are sitting in July. You're looking at 2 more months before a potential rate cut. And right now it's about almost a 50-50 chance that you're looking at right here. And again, it's not a huge rate cut. It's a small one. So maybe mortgage rates go down 0.25%. that maybe fixes their profit margins a tiny bit, but you need to lower rates, like a couple cuts you're going to need for Opendoor to become profitable again, in my opinion. And people are banking on rate cuts to make Opendoor be a successful company. But if we're stalling and we're not cutting rates here, they're going to just keep bleeding more and more cash as we go. And here's the also problem with meme stocks, right? The GameStop one in 2021, we could pull it up here because this is how I make points. I don't know why I have a chart on GameStop, believe it or not. I can't believe that. Let me zoom all the way out here for you guys here. We're going to go all the way back. Here we go. This is where the meme stock, this is where the pump happened right here. Oh, and this is again, so GameStop did a share split. So it was like 500. They did like a 5-to-1 split or something like that. That's why, or 4-to-1 or something like that. I don't remember what it was, but regardless, this is the meme stock rally back in 2020, 2021, end of 2020, all the way up, right? Taking a look at when it started, January 13th, and when it ended, January 28th, about 2 weeks. Then you get absolutely liquidated. Then a little bit of a rally again happens. So 23rd of February, all the way up till, it's another like 3 weeks or so. Then again, liquidated. Then they try again, May 11th, June 8th. So again, that's a little bit like a month. But so you're seeing like these rallies don't last long. They really don't. They're not lasting long in GameStop. Same thing with AMC, same thing with any other meme stocks that you look at here. And so when you take a look at Opendoor and the idea behind it, it is just on a disgusting downward trend here. But now you have this rally happening here. And now here's the question is, how long can this sustain? That's the question. So how long is this stock going to pump? And again, it started on like July 8th. We're now in July 21st. We're getting to over 2 weeks of this happening here. What it's gonna come back down at some point, maybe it rallies up into earnings. There's a huge pullback. I don't know, but again, they're still looking at negative earnings per share. They're still looking at it projected to be not a profitable company. It's not a profitable company. Why would you invest in a profitable company or in a company that does not make profits? They're losing, they're burning money. And if you're saying, well, Fridge, what happens when we have rate cuts? Rate cuts wouldn't happen until September. You would have to hodl the crap out of this until September. So you're looking at, again, about 2 months of holding this stock in hopes that it stays this high and no insiders, no institutions, and nobody liquidates their positions and pulls the rug out from underneath. What I look at right now, if you say, Fridge, what do we do? If you are somebody who's okay with gambling and throwing some money into something just to ride the wave and see what happens. I did it once with Tupperware back in the day where Tupperware was rallying and it was a huge meme stock squeeze that happened. And I did it. I made like $100 on it. I doubled my position on it. I put $100 in, made $100, and I cashed out and called it a day. I did it with that one and I was happy with it. The difference here, though, again, is that if you get in too late, you're the one holding the bag, right? You put in $10,000 now and it gets pulled out from underneath you. You just lost 10 grand in a matter of a couple of days. At any moment in time, this could get pulled out from underneath. It's just like meme tokens. It's just like those things. It's very, very similar, guys. This is a very dangerous investment. If you like gambling and being like, I have a 50-50 chance of making money, then feel free to throw some money at it. Maybe throw $100 at it if you want to. If you want to risk it. I'm not touching these. I don't touch these for a reason. Because knowing my luck, I'm going to buy in. It's going to crash right after that, and I'm going to mess up everybody else. Probably this is how I feel. It always happens. But it's a failing company. It's banking on interest rate cuts, which are not happening until maybe September. The only hype behind it is actually the retail investors, and it's on Wall Street Bets, and it's trending and this and that. And I will tell you, it's crazy. The volume yesterday was like over 1 billion shares. And if you are investing in this company here, here's where my advice would be. That's not financial advice before we wrap the video here. Watch the volume over every day. When the volume starts to roll over, it's going to die off. So right now you have this huge spike here. You had, again, if you take a look at the top up over here, 1.9 billion shares were traded yesterday on Opendoor. And right now the volume's already at 7 million. So the question is going to be, Is that volume going to continue? Because you need the volume to increase for the price to get pushed higher. If the volume doesn't increase and it starts to decrease, people are moving their money out. That means that this stock might roll over sooner than you think. So we have to get a very high volume candle here today to see what actually happens. So keep that in mind and watch it, because again, I think that's what happened with GameStop back again. I know we're going back to GameStop in 2020 here. But if you take a look all the way back, and then we'll wrap up here and call it a video on this meme stock stuff going on here. So here's your GameStop here, and take a look here. You get your nice little, there's a little bit of a quiet period here, and you get big candle. You had 700 million, you had 700 million, you had then you had 300 million, 200 million, 200 million, then it was 17. Then it was 140, then 300, and then again you start to see this kind of volume just start to die off. It was 700 million, now it's like 100 million. The volume starts to die off, and that's where those pulls happen from underneath you. So please be mindful of the volume and be on the lookout for it. But that is my take on Opendoor. Again, me personally, not touching this as a 10-foot pole. That's just how I'm going to do it. If you do, good luck to you. Hopefully you are making money somehow. If you made this far in the video, feel free as always to like the video, subscribe to the channel, turn on the bell notifications for all future uploads. I hope you enjoyed this breakdown of Opendoor and why I stay away from it personally. But again, please be mindful. This video is informative. Just to say, be careful of these meme stock pump and dumps here. Thank you guys so much for watching today's video. I hope you're making money in the market, maybe it's through Opendoor. I have no idea. And as always, I will see you guys in the next video.